The global economy enters 2024 facing a complex interplay of challenges and opportunities. The aftershocks of recent global disruptions, from the pandemic to geopolitical tensions, continue to reverberate. Inflation, while showing signs of easing, remains a concern. Policymakers are carefully calibrating monetary policies. Meanwhile, businesses and investors are grappling with uncertainty. Despite these headwinds, there are glimmers of resilience. The labor market, particularly in advanced economies, has remained robust. Technological innovation continues to drive productivity and growth in certain sectors. Emerging markets are poised for a strong year, offering diversification and potential for investors. This year will be about navigating a landscape of uneven growth, shifting policy environments, and geopolitical uncertainty. Understanding the key trends and potential risks is crucial. It will allow businesses and individuals to make informed decisions and capitalize on emerging opportunities. The following sections will delve deeper into the global economic outlook for 2024. We will examine the factors shaping the economic landscape and what they mean for businesses, investors, and policymakers alike. Global growth in 2024 is projected to be modest, reflecting the uneven economic recovery worldwide. The International Monetary Fund forecasts global GDP growth of around 3%, a slight uptick from 2023, but still below the historical average. Advanced economies, including the United States and Europe, are expected to experience slower growth this year. This slowdown can be attributed to several factors, including tighter monetary policies, persistent inflation, and ongoing geopolitical uncertainties. In contrast, emerging markets and developing economies, particularly in Asia and Africa, are projected to be the primary drivers of global growth. India, Indonesia, and Nigeria are among the economies expected to outperform. These countries benefit from several factors, including favorable demographics, growing middle classes, and increasing urbanization. This divergence in growth trajectories between advanced and emerging economies presents both opportunities and challenges. Investors are increasingly looking towards emerging markets for higher returns, while policymakers must address the potential risks associated with uneven global growth. Central banks worldwide are carefully navigating the delicate balance between controlling inflation and supporting economic growth. After a period of aggressive interest rate hikes in 2022 and 2023, many central banks are expected to moderate their tightening stance in 2024. The effects of these monetary policy decisions are far-reaching. Higher interest rates can help curb inflation by making it more expensive to borrow money and spend. However, they can also dampen investment and slow economic growth. The impact of monetary policy on inflation is expected to become more apparent in 2024. As interest rate hikes take effect, inflationary pressures should continue to ease. However, the path to price stability remains uncertain, and central banks must remain vigilant in monitoring inflation expectations and adjusting policy accordingly. The global labor market has shown remarkable resilience in the face of recent economic challenges. Unemployment rates in many countries have fallen to historic lows, and there are widespread labor shortages across various sectors. This tight labor market has contributed to wage growth, particularly for lower-income workers. However, wage increases have not kept pace with inflation in many cases, leading to a decline in real wages for some segments of the population. The labor market is also undergoing a significant transformation driven by technological advancements, automation, and the growing demand for skills in areas like technology, healthcare, and renewable energy. This shift will require workers to adapt and acquire new skills to remain competitive. Section 5. Going green. The economic implications of a sustainable future. The transition to a more sustainable, low-carbon economy is one of the defining challenges and opportunities of our time. This transition has significant economic implications, creating new industries, jobs, and investment opportunities. Governments worldwide are implementing policies to accelerate the adoption of renewable energy sources, improve energy efficiency, and promote sustainable practices across various sectors. These policies are driving investment in clean technologies such as solar and wind power, electric vehicles, and energy storage. The green energy transition is not without its challenges. It requires significant investment in infrastructure, research, and development. There are also concerns about the potential economic disruption caused by the shift away from fossil fuels. However, the long-term benefits of a more sustainable future outweigh the short-term costs. Section 6. The rise of emerging markets. Opportunities and challenges. Emerging markets are playing an increasingly prominent role in the global economy. They are home to a growing share of the world's population, and their economies are expanding at a faster pace than those of developed countries. This growth is attracting significant investment as businesses and investors seek to capitalize on the opportunities presented by these dynamic markets. Emerging markets offer diversification benefits for investors looking to reduce their exposure to the risks of developed markets. However, investing in emerging markets also comes with its own set of challenges. These include political instability, regulatory uncertainty, and currency fluctuations. Investors need to carefully assess the risks and rewards before investing in these markets. Section 7. Geopolitical risks, navigating uncertainty. The global geopolitical landscape is marked by heightened tensions and uncertainty. Conflicts, political polarization, and trade disputes threaten to disrupt global supply chains, fuel inflation, and dampen economic growth. The ongoing war in Ukraine has had a profound impact on the global economy, leading to higher energy and food prices and exacerbating inflationary pressures. The conflict has also highlighted the interconnectedness of the global economy and the potential for geopolitical events to have far-reaching consequences. Navigating this uncertain geopolitical environment is a significant challenge for businesses and policymakers alike. It requires careful risk assessment, contingency planning, and a willingness to adapt to changing circumstances. Section 8. A note of cautious optimism. The global economic outlook for 2024 is characterized by both challenges and opportunities. While risks remain, there are also reasons for cautious optimism. The labor market is resilient, innovation is driving growth in key sectors, and emerging markets are poised for continued expansion. The key to navigating this complex landscape is to stay informed, be adaptable, and focus on long-term sustainability. By embracing innovation, investing in human capital, and working together to address global challenges, we can create a more prosperous and equitable future for all. Section 9. Staying ahead of the curve. The importance of adaptability. In today's rapidly changing world, adaptability is no longer a luxury, but a necessity. Businesses and individuals alike must be prepared to adjust to new realities, embrace new technologies, and learn new skills to remain competitive. This requires a shift in mindset from simply reacting to change to anticipating and embracing it. It means fostering a culture of continuous learning and innovation, being open to new ideas, and being willing to challenge the status quo. The global economy is in a constant state of flux. By embracing adaptability, we can navigate the challenges and seize the opportunities that lie ahead.